Hi everyone.
Hi, Dr. Nick!
And welcome back to episode 2 of my 3-part mini-series about whether you want to rent or buy a property. If you haven't seen episode 1 yet, I would go back and watch it. It should be up here or up here, somewhere to click and go and watch it, because I can't guarantee there's going to be no spoilers from episode 1 in this episode. So if there is anything you want to find out from episode 1, I'd go back and watch it first, and then we can move on to episode 2. So in the previous video we did talk about the initial costs you'll have to either buy or rent a property, and in this episode we're going to base it on the monthly and ongoing costs for renting or buying a property. So this is going to depend on sort of prices of property in your area and the rental demand, because this will affect the sort of rental figures that you will be paying. However, I am going to use the same 2 properties from the previous video just to keep things consistent, and again hopefully there'll be something within that range that is in your area. So I know in the previous video I did briefly mention rental figures, and later on in this video I will be explaining a breakdown of this to work out how I came to those figures, just so you've got an idea of where I got those numbers from. So let's begin. You've managed to save up that money for the deposit, you've managed to buy your dream home, and now you've got the ongoing cost of paying your mortgage. So let's say you've bought this £200,000 house on, say, 25-30 year mortgage, and with an average interest rate of about 1.85% currently. My mortgage on my house, it's at 1.94% as a fixed term for 5 years, so this number isn't too unrealistic for what I'm actually paying myself. So depending on the type of mortgage that you have and your own personal circumstances, these rates could be higher, they might be lower, but we'll stick with these for the ease of the example. So for your £200,000 house, you are going to be paying in the region of £750 per month on your mortgage repayments. This is based on the 10% deposit, so you'd have a mortgage of £180,000. And then for the £400,000 house, as you could imagine, double the price of the house, double the price of the payments. You're going to be paying £1,500 per month on your mortgage repayments. Now again, these could vary slightly depending on what mortgage deal you get, and if you do have a fixed term mortgage for say 5 years, at the end of that 5 years your mortgage will go back onto the bank's variable rate, which is most likely going to be a good amount higher than what you're currently paying. So you'd want to review that with your mortgage broker. Please don't take this advice from me. I'm not a mortgage broker, I'm not a financial advisor. So if you are in this position, please do speak to the professionals before you do anything. One thing just to mention, at the time of recording in November 2020, interest rates are at an historical low level. I've got records going back to 1975, and even the 2007-8 crash still haven't come down as low as what interest rates are now. So this will have a big impact in what you're paying on your mortgage, and I can see interest rates, well, there's only one way interest rates can really go right now, so these payments are likely to go up in the future. As interest rates go up, your mortgage payments will go up as well. So let's have a look at rent. The average yield in the UK for a rental return, so what you will be paying to your landlord, is 3.53%. So basing on that figure, for the £200,000 house, you'll be paying somewhere in the region of £575 to £590 per month, and the £400,000 house, you'll be paying somewhere in the region of £1,150 to £1,180 per calendar month. Now for me, I feel like this number's a bit low. My own portfolio generates a return of about 5.26%. So I think in a real world situation, the average yield is a lot lower than what you would actually be paying. So I think the UK average yield is quite affected by London and the surrounding areas, as a lot of the yields in the area barely push past 2%, whereas the rest of the country seems to be almost higher than the average. So for this, I'm going to base the rental figures on my portfolio. So the £200,000 house, you will be paying £875 per calendar month, and the £400,000 house, you're going to be paying £1,750 per calendar month. Now this is quite a difference between the two, but I feel like using my portfolio as a more real world scenario is going to be better than using the UK average, unless you happen to live in and around London where the yields are much lower, but obviously the property prices are higher, so you are still going to be paying a lot more. So looking at the UK average yield, it looks a lot more affordable to rent rather than buy, as you're going to be saving yourself quite a bit of money per month not paying off a mortgage. However, looking at the real world portfolio, it is looking like it's more beneficial to actually buy a property, because your monthly mortgage payments are going to be less than the rent you would be paying, which makes sense because your rent pays off the landlord's mortgage, and if you pay less, that means the landlord has to stump up the difference, which isn't quite how it should work. And this is what I expected. I expected that monthly mortgage payments would be lower than what rental payments would be. I mean, especially with interest rates being as low as they are, you're not going to get a cheaper mortgage in the future unless interest rates do go negative. But that's something completely different. If they are as low as they are now, they can only go up, which means your payments will be going up as well. Obviously, as interest rates go up, it's going to make the landlord's mortgage more expensive, therefore it's going to put rents up as well. But I still think buying now is more affordable. However, I know in the previous video I mentioned, is there something better you could do with your money rather than buy a house? And this is something we could look at now. Yes, it does seem more beneficial to buy and pay off a mortgage than it does to keep paying the rent. However, what's the difference in the mortgage and the rent per month? And how much could you actually save in terms of the deposit you've paid for buying the house, and how much more rent could that go towards? In fact, let's just have a quick look at that. Let's take the £200,000 house and the £20,000 deposit that you'd need for it, and then we'll have a look at the rent, £875 per month, but your mortgage would be £750. So the difference in the two is £115 per month, and if you take that £20,000 deposit that you'd have, that would work out to be 1,703.9 months of rent you could pay just for that deposit, which equates to like 14 and a half years. That's a long time you could be renting for the same price of a deposit on a house. But then you own the house, and as the house price goes up, you're going to gain more equity in it. So from that side, buying is a more beneficial thing. However, you could keep renting for an extra 5 years and still have nearly 10 years worth of rent saved up that you could invest to make more money from. And if you can make up the difference or make up more, so if you can earn at least £116 per month, it's going to work out more beneficial to rent and invest your money than it is to buy the property. However, with that said, we're going to put this one down to a win for buying the property, just because the running costs of a mortgage is cheaper than what the rent would be. So far it's one winter renting and one winter buying. So as we're talking about the general running costs and monthly outgoings of a property, I'd want to mention about maintenance and repairs. If you're in a rented property and something goes wrong or something breaks down and it's not your fault, then it's down to the landlord and or their letting agent to fix this problem for you. And you don't even have to be there to fix the problem. They'll have a set of keys, so if you're happy for them to go in and do it, you can just do your own thing and not have to worry about it, knowing that you're going to come home to whatever it is will have been fixed or repaired. And whatever it costs to fix and repair it, that's down to the landlord to pay for. You won't have any responsibility for it unless it's your fault it broke. But let's not say you broke it, let's just say the boiler broke down. It's not your fault, but then it's not your responsibility to fix either. However, on the flip side to that, if you own the property and your boiler breaks down, it's down to you to speak to a gas engineer or a plumber to come out and have a look at what's gone wrong with it. You need to be there when they come round, or if you can sort some other way of letting them gain access to your property, but I wouldn't leave a key under a plant pot. It's just asking for trouble. And you've got to pay for it. Whether it's taking it from your emergency fund or claiming it on your insurance, whatever the expense is, it's down to you to do as the homeowner. So that's another upside to renting. You don't have the responsibility of having to fix things if they go wrong. Someone else will do it for you. And if for whatever reason your rented property is uninhabitable, it would be down to your landlord to provide some form of alternative accommodation for you as part of their service in maintaining your home. Whereas if you own the property and you can't live in it, what are you going to do? You're going to have to pay for your hotel or stay with friends or do something else, as well as trying to sort out getting someone to come and fix the problem whilst you need to be there. It is a lot of hassle owning a home if something does go wrong. And I know this firsthand. I had one of my rental properties, one of the pipes in the bathroom leaked, and it was raining water through the kitchen ceiling. I couldn't leave the tenants living there, so I put them up into a hotel for a week whilst we managed to get this whole problem sorted out. And that's something that I had to deal with, and all the tenant knew was I was going to look after them. If it happened in my house now, I don't know what I'd do, because I don't have anywhere else to go unless I went into a hotel. So far we have covered all the initial costs and requirements you need in order to be able to either buy or rent a property to start with. And now we've covered what the monthly costs are and some of the other ongoing concerns you should be aware of whether you are renting or buying a property. And in the final part, I will be looking at how you end a mortgage or a tenancy at a rented property, or if there's any ways of getting out early if you need to. And so far it's a win for renting and a win for buying, so this final part may determine whether or not overall it's better to rent or buy, so it's definitely worth sticking around for. So on that note, I do hope you've enjoyed this video, and I would really appreciate it if you could just click that like button. It lets me know that you've enjoyed the video, and it also helps promote this video to other people who may want to see it. And if you haven't already, please click that subscribe button and click that notification bell, so it will notify you when I make the third and final upload, so there's nothing you're going to miss out on. And as I said at the beginning, if you haven't seen episode 1, you shouldn't have got this far without, but if you have, go back and watch it just so you know what we covered in episode 1 as well, and the final part isn't far away. So I do hope you've enjoyed the series so far. If there are any comments you want to make or anything you want to tell me, please let me know in the comments below. I do read and reply to all comments that are posted, so if there is anything that I have missed out, please let me know and I will correct it in the final video. And please also let me know if you are in rented, or you own your own home, or you have a future plan of buying your own home. Please let me know, just so I can know where everyone is, and in the final part I can tailor some things more towards rented or owning, depending on what everyone is doing right now. So I do really hope I will catch you in the third and final part of the video. So until next time, bye for now.